Hey there, future retirees and pre-retirees too. Today we're going to be talking about a subject that is near and dear to my heart, the wonderful world of real estate. And we're not talking about just real estate to build wealth, but also real estate as a retirement strategy. Now, I know some of you guys might be thinking, yeah, but Andrew, I'm not one of those big moguls that has really big, deep pockets and lots of cash to invest in real estate. How can real estate possibly affect or help my retirement? Well, I want to encourage you, even if you don't have massive pockets, real estate can be an absolute game changer that can positively affect your retirement in a great way. But before we get into the juicy details, I want to tell you a quick story. All right, so there's Tom and Sarah. And Tom and Sarah are just like you and me. They're hardworking folks, they've been diligent at saving, and they're approaching retirement. But as retirement age got closer, they found themselves worried about how much they had saved. Does this sound familiar to you? They were worried, like most people are, that what they had accumulated wasn't going to be enough to last their entire lifetime. This is a big concern of folks. Maybe it's a concern of yours, but fear not, because real estate came to the rescue. Tom and Sarah took a leap of faith and they invested in real estate, and boy, did it pay off big time. Get this. Tom and Sarah, by investing in real estate, allowed themselves to generate passive income to supplement their retirement savings. Additionally, they had an appreciating asset that they could fall back on if they needed to get access to cash. Plus, the appreciation of the asset provided a valuable nest egg that they could fall back on if they needed some cash. And the best part is they were able to maintain their standard of living, their lifestyle, because of that extra real estate income. No longer are they worried about outliving their money. They have a guaranteed paycheck, or as guaranteed as you're gonna find, a guaranteed paycheck to help supplement their savings in retirement. So what are the overall benefits of real estate as a strategy in retirement? Let me break it down. Passive income. Imagine Tom and Sarah's delight when they realized that they were actually supplementing their Social Security income, supplementing their pension income with rental income that appreciated by 8 to 12% per year on average. It's allowing Tom and Sarah to keep up with inflation. It's allowing them to have more than enough so they can do the fun stuff, the travel, the hanging out with the grandbabies, the gifts. Retirement is looking up for Tom and Sarah because they have passive income that they can count on in retirement. Appreciation. Not the appreciation you have for somebody when they help you out in life. That appreciation's cool, but this appreciation is even better. Over the years, Tom and Sarah watched in amazement as their asset, their real estate, began to appreciate in value over time. Over the last 20 years in America, real estate has appreciated on average 3.8% per year. Now, depending upon where you live, it actually might be very much higher than that. If you look at where I live here in Nashville, it's more like 8 to 10% per year, with all these people moving out of the blue states and going more towards red states. So appreciation is a big deal in retirement. What started as humble investments grew to something massive thanks to their real estate investment. And Tom and Sarah down the road can sell some of their properties and experience a massive gain, or they can pass it on to their loved ones, essentially tax-free, because of something called the step up in cost basis. Appreciation in real estate is a beautiful thing. Speaking of taxes, let's talk about tax benefits. The sweet sound of tax deductions. Sarah and Tom were smart, and they took advantage of the many different tax deductions that you can utilize in real estate. Did you know that you can deduct mortgage interest, you can deduct property taxes, you have something called bonus depreciation if it's an investment, like a rental property, where you can accelerate depreciation so that you don't have to pay taxes that year? All of these different strategies they use to their advantage, and they pay as little in taxes as possible. These tax breaks help minimize their overall tax burden and allow them to enjoy more of their income in a tax-free manner. Let's talk about diversification. Now, contrary to what most financial advisors will tell you, that all of your money should be in the stock market, I actually don't agree with that. I think diversification is really important. And historically, real estate has been way less volatile than the stock market has. Sarah and Tom knew this. They knew that to reduce their risk of their portfolio, their nest egg, they wanted to have some money invested in real estate. By investing in real estate alongside of the traditional assets like stocks, bonds, mutual funds, studies have shown that you can actually reduce your overall risk to market fluctuations drastically. Some have even said by up to 40%. So from a diversification standpoint, real estate can be a great piece of the pie when it comes to what to invest in your portfolio. Beating inflation. Let's face it, over the last couple years, inflation has been a problem. Real estate is a wonderful way to beat that inflation down, and Tom and Sarah knew this. With an average inflation rate of 2 to 3% over the last 100 years in America, real estate has kept up with that inflation rate and in many circumstances even beaten it. So real estate is a wonderful way to make sure that your dollar, your money saved, is actually keeping up with inflation and in many circumstances beating inflation, so the value of your money is not being depleted or eaten away each year. And finally, low risk. Sarah and Tom knew that real estate is relatively low risk when it comes to retirement. Sarah and Tom enjoyed predictable returns, they enjoyed the tax benefits, and they knew that even if we had market fluctuations up or down, it's unlikely that they're going to lose their home because they're not over leveraged. They don't have a massive, debt payment where the rent is barely keeping up. They have a spread there, a margin, and it's such a wonderful investment. They're going to hold on to it and let it appreciate over time. So real estate is a very, very low risk asset in your retirement portfolio, provided you know what you're doing, provided you're not over levered, provided you are in a decent real estate market where people are moving there and there's demand. It can be an absolutely stellar investment strategy in your retirement. So, whether you're dreaming of beachfront condos or cozy cottages by the stream, maybe it's a high-rise apartment or a house in the countryside, real estate can be a wonderful addition to your retirement portfolio. Thanks for tuning in. Hopefully you got a lot of value out of this video. If you did, please like and subscribe, and we will see you on the next video.